Let's talk about Patel Engineering. Earlier in this week, it won a letter of award for a debang multi-purpose project coming in from NHPC. Recently, their joint venture also won a 1275 crore rupee contract from Madhya Pradesh. So let's welcome Rupen Patel, who's the managing director of the company, to discuss these recent order wins and, more importantly, get a broader business outlook as well. Rupen, thank you for joining in. These two orders that you've got recently, could you give us a sense of, what is your share of business in both these orders that you've got? And what does this take your overall inflow for the year to in terms of orders? What's the outlook for the remainder of this year?
On the order book right now, our both are in joint venture. Our share is approximately 40 to 42% in both these joint ventures. Our order book currently stands at close to 20,000 crores, which is 73% in hydro and tunnels. About 22% would be irrigation, and about 5% would be the roads and miscellaneous. This is what we see the order book stand at. If you look at it historically, Patel has got orders worth 7,700 crores this year alone, which is almost twice the turnover of last year.
All right. Hi, Mr. Patel. Good morning and good to have you on the show. So you're sitting on a sizable order book, which means that execution will be very important from here. Now, last year on a consolidated basis, you did close to around 4,200 crores of revenues. This year, what are you looking at in terms of revenues for this year, and what kind of margins as well will you be targeting?
We have a consistent EBITDA between 14 and 15% historically. So this EBITDA will continue. Based on the existing order book, one should see a minimum of a 15% increase year on year.
15% revenue growth.
So 15% revenue increase, margins between 13 to 14 odd percent. And these two orders, you said that you have about 40 to 45% share of right now. Could you give us a sense of, how many orders are you currently the lowest bidder in? Your order book is close to 20,000 crores. What is your L1 position?
I think all the L1s have been received. We are recently bidding. There is one more L1 which is yet to come through right now.
So,
which is yet.
Go ahead. I think we have you on a bit of a scratchy line, Mr. Patel. So if you could speak a little, louder, it will be clearer for our audience as well. What is the order pipeline? You said you are L1 in, all your L1s have been converted into orders. What is the pipeline? What is the kind of inflow that we can expect for the remainder of this year?
What we are targeting is an order book of 25,000 crores by March, so that our order book is at least 5 times that of turnover, so that the company can easily consistently grow at 20% per year-on-year basis. So that is what you see in the trajectory of the company going ahead.
All right. Mr. Patel, your working capital days are high. They've always been high, 300 days, 400 days, or I think last year it came down to around 230 days. Could you tell us what could that, steady state be, if you could give us a sense on that? And also your interest cost is around 420 crores. So what is the updated debt in your books, and where do you see that number headed? Working capital and debt.
Yeah. The working capital of the company has gone up because the company is executing right now ETC contracts. So where payments are made based on events or milestones. Once a milestone is achieved, you get paid. If you look at it, our normal working capital should come down to 3 to 4 months. This year.
Okay.
That is what we see. Our current debt position, we have brought down our debt in the last 5 crores. Last year itself, we brought it down by 500 crores. The net debt reduction in the end of the year will be 250 crores. I see that our debt position will consistently be reducing as we go ahead, because we have been selling non-core assets to reduce our debt. As of date, our debt stands at 2,000 crores.
What is the debt as of now? 1,950 crores?
1,950 crores, yes.
And you're saying it will keep coming down from here?
Yes.
By the end of the year, what's the target? By 2025, if you give us a target?
We intend to reduce the target. By 25, I think we are targeting another reduction from 200 to 300 crores.
Okay. You said you are looking to offload some non-core assets and monetize that to repay debt. Can you give us a sense of what are the non-core assets that you're holding? What is the value that you can realize by selling them?
See, what we have been doing is we historically have been selling our land bank in order to reduce the debt ever since we were restructured about 7 years ago. Recently, we sold Michigan, which is a subsidiary engaged in infrastructure construction. We sold it for about 70 crores.
And the other land that you have, which is sellable, is how much? Because Michigan, you've realized the value. What is the realizable value of the other non-core assets?
It's about 1,000 crores plus.
Mr. Patel, I'm just looking at
They will
it.
be,
Yeah,
sorry,
please go ahead.
but they will be sold consistently as per a plan. We have a debt reduction plan, wherein every year we come out to certain prime lands which will be sold, as opposed to being developed.
Lovely. All right, Mr. Patel, your promoter holding in the company was around 60%, 61% approximately. Now, that has been coming down. Could you tell us why is that? Has there been some promoter sale? Have you infused some capital? That's the reason why. And the last count, it is around 39.5%. So are you comfortable at these levels?
Right now, my holding is about 43%, 39%. I think I'm comfortable at these levels. I don't see any further liquidation taking place.
Why did it come down though by so much? Have you been selling some stake? Has one of the promoters been selling stake, or did you issue fresh capital? That's why it's come down so much.
We had issued fresh capital. We had come up with the rights issue, and we issued fresh capital. That is why it has come down.
You don't want to take it up
But
from
we are not
here?
looking. Yes, I might take it up. There are talks underway, but nothing is concrete as well.
Yeah, because if you're talking about growing by 15%, sitting on an order book of more than 20,000 crores, working capital days are going to come down and margins of mid-teens, one would think you would want a bigger chunk in your own company. So could that be a plan?
Yes. Yes, that could be a plan.
All right, we take that on board, and obviously you won't be able to disclose much beyond the plan that you have, but we'll hold on to all the things that you're talking about, and perhaps look at it with the numbers that you will report and the action that you do as well. Thanks a lot, Mr. Patel, for joining in. A pleasure speaking with you. Wish you good luck for the remainder of this year.